lands you when you are making your checks. So the next indicator is the exponential moving average. Exponential moving average is the average of price over a set window that weights recent data more heavily than older data. Before we continue, please, this is a good time. If you have not subscribed to this channel, if you have not shared this video, if you have not liked, if you have not commented in the chat, this is a good time for you to do that. Please go ahead, subscribe, share, like, post on your WhatsApp, post on your Facebook, post on your X, wherever you have connections, do that, and let's continue to enjoy this together. So exponential moving average. So it reacts faster than a simple moving average. The recursion is more intuitive than it looks. Each new EMA value is a blend of today's price and yesterday's EMA. So you have a multiplier effect, which is simplified by K. So just giving us, you don't necessarily need to memorize all of these formula, but just note exponential moving average. We use it to define the trend direction. Right? We want to find out the support levels, resistance level before we move. So look at those numbers, period settings. There's a 9 period, there's a 21 period, 50 period, 200 periods. So 200-day EMA, 20-day EMA, 10-day EMA, 50-day EMA. So these are support levels. Okay, support levels. So you want to pay attention to it. So if it's spending a lot of time at that level, then that's a support level. Which might be worth investigating, looking up, right? So 9 is short term, 21 is swing period, 50 is intermediate, 200 is long term. So the trend direction and the crossover signals, all of these are giving us potential buy or sell notions. So look at the 9-day moving average, look at the 10-day, 20-day moving average. So everything is tending upwards. So in a trend, pullbacks often stall at the EMA. All right. So maybe in the last 10 days, it's been stalled at a specific price. They've been trading left, right on that price level for a period of time. Then you want to begin to mark that as a support zone, and that becomes a moving average going forward. Right. So if you look at the price line here, so what is the moving average for this one? The moving average should be around $118. Should be around $118. That's the moving average, because you're spending some time here. 10-day, 20-day moving average. Yeah. So it's spending some taking some time. It's taking a breather, really. It's taking a breather at that moment. And anything could happen from there. There could be an upward trend or a downward trend, depending on what the market is saying, what Wall Street is saying. All right, so if you look at this one now, if you look at the EMA against the support, you see that it's still tending upwards in this case. Both lines in this chart use the same 10-day period window, and the only difference is the weighting. So EMA gets there first, sometimes by only a bar or two. So you might want to acknowledge that. So if you get it, so it doesn't necessarily mean that, oh, this is a time to buy. You want to look at this and then juxtapose with an RSI to give you a feel of what the market is saying. You cannot get earlier at the same time. Anyone who claims a setting that does both is describing a backtest. So if you're wondering, so which exactly is to use everything. So just use what works for you. What is important, you are informed about the different tools. Then the next indicator I want to touch on is the volume weighted average price. So VWAP is categorically different from the two moving averages that we just covered. The calculation is weighted average, where the weights are volume. So a price where a million shares traded counts 100 times more than a price where 10,000 did. So both sums accumulate from the session open and reset the next day. So VWAP resets every day. This is the price paid per share across the session. So unlike the moving average, VWAP tells where money actually changed hands. They go from buy to sell. So those are things you can look up. Just pick any stock of choice, look at the technical indicators, and just pay attention to those points where resistance hits, where there was a support, moving averages, and everything. And then I think you can also look up ChatGPT, Google, Gemini, Copilot. You can leverage this to get some understanding of the averages. So usually, what traders do with VWAP is to filter buyers. Right, so this is the simplest and most robust. So price holding above VWAP suggests intraday buyers are in control. So you might say, oh, this is a buyer's market, or this is a seller's market. It's because of what the VWAP is saying. Another thing to note is the mean reversion target. Extended moves often retrace toward VWAP. Often, again, this is a tendency, not a rule, emphasis on often. So then there's the execution reference, where this is the most concrete use. So if you are building a position through the day, you are feeling a near or below VWAP, that means that you did better than the session's volume weighted average. So with execution reference, with that scale into positions near VWAP to avoid paying above the session's fair value. Then there's an anchored VWAP. So you will start the calculation from earnings date, the gap, swing low, to extend it beyond 1 day. So usually standard VWAP resets every day, grows less responsive as session volume accumulates. All right, so this is not something you want to use for a leap buy for a long-term trade. Just use this for a typical market day. Then finally, there's a MACD. So what MACD do is this one, of course, a little bit of extraction from moving averages. So this is a convergence divergence of moving averages. So this is a core measure of fast average, of how fast the average has pulled away from the slow one. So because most confusion about MACD comes from treating it as one line, there's a need to understand the three components: the MACD line, the signal line, the histogram line. So the MACD line is the 12-day EMA minus the 26-day EMA. It measures how far the fast average has pulled away from the slow one. So MACD is built entirely from moving averages, so it inherits their lag. So then the signal line covers like 9-period EMA of MACD line. Histogram, just the difference between the MACD line and the signal line. So this is what it looks like. Right? So from sell to buy. So if it's going up, then there's buying. If it's going down, then there's selling. Alright, so these are indicators that you leverage to be able to make informed decisions before you enter a trade. So each of the four technical indicators we discussed, they all complement one another. You don't use one in isolation. So one builds on top of the other, so you use them to fine-tune one another. Right? So if you need something to help you spot exhaustion and divergence, you want to consider RSI. So if you're looking for something to establish direction and key levels, you use estimated, you use an EMA, moving average, exponential moving average. If you're looking at intraday entries, if you're looking at fair value reference, then MACD will give you the information you need to confirm a shift, whether it's an upward trend or a downward trend. So key takeaways here is that all four of these indicators are from past price and volume to describe what has happened. So none of them are being used for forecast. You have default settings. You can always adjust the settings depending on your level of technical expertise. But for me, I just leave the default settings as they are. Performance depends on regime. All of other things depends on whether the market is going to go up or go down. Political climate, economic climate. All those things are external factors that determine eventually, despite what the technicals are saying. So you just want to be on the lookout for those forces you cannot control. All right. So yeah, so this is the end of the conversation. So in this video, we showed you the 4 major indicators you can leverage to determine which stock to buy, when to enter a trade, when to pull out of a trade, especially if you are day trading, or trading for leap buys, long trades. So I hope this has been very helpful. So once again, please make sure you check the subscribe button, click on the subscribe button, subscribe to our channel, share this with your friends, subscribe, like our videos, so that I can do more of this, bring more of this to you. So I'm going to see you on the next one. Take care.